Hey, this is Matt from InvestiQuant. Today is Monday, November 2nd, 2020. This morning, we saw the markets gap up on this first trading day of the month. We made an attempt higher and did a decent job of getting higher, but this afternoon, we have given up the gains and we have turned red on the session. So what I wanted to do this afternoon is take a look at what has happened historically when you're forming a red candlestick but still above the prior day's close on the first trading day of the month. So you can kind of see this pattern forming here in 3 of the 4 indices right now as we are heading into the afternoon session. And that pattern being we're trading below the opening print. So this top left chart, this is the S&P. We opened right around here where I've got my cursor, and we are currently trading below that price, but this dashed cyan line is Friday's closing price, and we're still just a little bit above that price right now, but we're below the open, so we're trading higher, but we're forming a red candlestick, and that's the same pattern that's taken place over here in the Russell in the top right and the Dow in the bottom right. It is not the same pattern in the NASDAQ, but currently 3 of the 4 indices have this pattern forming as I am recording this video. So I figured we would take a look at that in Discover. So let me come in here and select all 4 instruments, and NASDAQ's not going to be the same pattern, but I'm going to go ahead and add it in there anyway. And then we are going to use a time-based entry, and I'm going to use 2:30 p.m. Eastern Time. I'm going to set it up as a long, and the exit will be at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Next, I'm going to go into post-open filters, and this is where I can create that type of price action where we're trading below the open. So intraday close versus intraday range, I can put close below the open. And then if I scroll down just a little bit, I've got my screen blown up right now. I'm going to come to this close above prior close. So intraday close versus daily levels equals above prior close. And that's going to mean that the price as of 2:30 is above the prior day closing price. And for the S&P, we are just barely above that right now. So by the time this recording actually goes out, I have no idea if we'll be above it or below it, but I'm going to go ahead and leave it in there because that's the pattern that we're currently seeing. And then next, I'm going to go into indicators, and I'm going to say we are above a 200-day simple moving average. And then lastly, I'm going to go to the calendar section and say it is the first trading day of the month. That is right over here in the active today. So I can just click it over there and hit view results. And here we go. So these are the results of going long at 2:30 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time. When it is the first trading day of the month, you are above a 200-day simple moving average, and you're trading above the prior day's closing price, but below the current day's opening price. So a red candlestick forming that is trading above the prior day close. And historically, we've got 25 samples in the S&P, 20 in the NASDAQ, 22 in the Dow, and 11 in the Russell. If we take a look at the win rates, S&P being the strongest, 68% have closed above this 2:30 p.m. Eastern Time price. NASDAQ, 60%. The Dow is the weakest, 41%. And then the Russell has the strongest, but it also has the lowest sample size. So it's a little bit easier for those numbers to get a little bit exaggerated on small sample sizes like we've got there. But 3 out of the 4 instruments have favored the upside following this pattern. Taking a quick look at the average win, average loss. Average win a little bit bigger than the average loss in the S&P. That is true for the NASDAQ. The Dow, pretty similar size, average win to average loss, and then the average loss is larger than the average win in the Russell. So a little bit mixed on the average win versus average loss in this pattern, but looking at all 4 of them, on average, it has leaned a little bit to the long side. And I'm showing you this 2:30 p.m. Eastern Time price, again, with us trading below the open but above the prior day close. I don't know if this pattern will be true at that time, but what I do want to mention is I've looked at several other patterns on the first trading day of the month, and the bias tends to be a little bit more on the long side until you get close to the end of the session. So the latter part of the end of the day tends to get more bearish, including like even just the last 15 minutes tends to be one of the weaker periods that I saw. So if you're holding on to longs, you may want to dive in and study some of these last 30 minutes of the session as well, because the bias gets weaker as you approach the close in the later portion of the day. So with a little bit of time left, being an entry at 2:30 p.m. Eastern time, it has still favored the upside, but as you start pushing away from that time and getting closer to the end of the day, it starts to deteriorate and some of them start getting a little bit weak. So definitely worth studying on your own if you dig into Discover. So good luck today, and we will see you tomorrow.